All right, welcome to this explainer. Today, we're diving into the exact mathematical blueprint that financial experts use to guarantee a life of permanent independence. Seriously, imagine waking up tomorrow, checking your bank account, and having this profound realization you don't have to go to work today, or tomorrow, or actually ever again. We're about to explore the absolute concrete mathematics of human freedom. So grab a pen, block out your distractions, because understanding this math is literally going to change how you look at money forever.
Take a second to really think about that. What would you do if you never had to work again? If your bills were just permanently covered? Now, I know for a lot of people, this sounds like total fantasy. We've all been conditioned to accept this really flawed standard timeline, right? You study for 20 years, work for a grueling 40 years, rack up consumer debt, and then, if you're lucky, enjoy a decade of retirement when you're older. But what if the goal isn't just retiring when you're old? What if the goal is achieving absolute financial autonomy right now?
Okay, we've got a super tight agenda for you today. We're going to cover 1. The 40-year trap. 2. The 25x rule explained. 3. The math behind it. 4. The psychological trap. And finally, 5. Your roadmap to freedom. Let's get right into it. Section 1. The 40-year trap. Before we get into the heavy math, we have to talk philosophy and redefine what money actually is. Because most people just see money as a tool to buy stuff, a bigger house, a faster car. But for the financially elite, it's not about buying things at all. It is purely a tool to buy back your time. Think about this quote for a second. Every time you put a depreciating asset on a credit card, you aren't just spending dollars. You are quite literally trading away days, weeks, or even months of your future life because you now owe the universe the labor required to pay off that debt. Consumer debt just completely locks you into the daily grind. It makes unnecessary spending a direct, literal theft from your own future freedom. And this highlights a really stark contrast between an income-driven lifestyle and an asset-driven one. Say you have a high earner making $500,000 a year, but they spend $490,000. They are incredibly fragile. One lost job and their whole lifestyle crashes instantly. Compare that to someone with an asset-driven setup. Their survival has absolutely nothing to do with physical labor. That is true permanent autonomy. Real wealth is measured by how long you can survive if you stopped working today.
Moving on to Section 2, the 25x rule explained. This is where we shift from philosophy to the actual mathematical engine that converts your living expenses into a permanent asset base. This is exactly how you make work entirely optional.
The rule itself is incredibly simple. All you do is figure out your absolute annual living baseline, so rent, food, insurance, basic utilities, and you multiply that exact number by 25. That's it. That is your absolute financial independence target. We call it your freedom number. Once you hold that amount in income-producing assets, mathematically speaking, you are totally free.
Now, what is really fascinating about this formula is how your target changes drastically based solely on your current expenses. It has absolutely nothing to do with your income. So, if you live a minimalist lifestyle and spend $25,000 a year, your target is $625,000. But if you're burning through $100,000 a year, you suddenly need $2.5 million. By simply optimizing your life and cutting out toxic spending, you massively lower the amount of capital you need to buy your freedom.
So you might be wondering, where exactly does the number 25 come from? Let's get into Section 3, the math behind it. Why is this multiple historically reliable?
I promise, the number 25 is not just pulled out of thin air. Back in 1998, these finance professors at Trinity University wanted to find a truly bulletproof withdrawal rate. So they stress-tested investment portfolios against the absolute worst economic disasters in history. We're talking the 1929 Great Depression, the hyperinflation of the 1970s, the whole shebang. They wanted to figure out exactly how much someone could withdraw every single year without running out of money before they die. And they discovered what is now famously known as the 4% rule. Basically, if an investor withdraws exactly 4% of their initial portfolio value in year one, and then just adjusts that dollar amount for inflation every year after, their money has an incredibly high probability of surviving indefinitely.
Here is the absolute aha moment. Mathematically, withdrawing 4%, which is 1 divided by 0.04, is exactly the same as multiplying your expenses by 25. It's the mathematical inverse. So multiplying by 25 gives you the exact portfolio size you need to safely withdraw 4% forever. This historical market data is the absolute foundational pillar of the financial science we're looking at today.
So how does this actually work in practice? Well, it essentially creates a perpetual motion machine for your wealth. Imagine you hit $1 million, and you invested in balanced, low-cost index funds. Historically, the stock market averages a 7 to 8% annual yield, even after adjusting for long-term inflation. Because those historical returns actually outpaced your 4% withdrawal, the rest of your money just keeps compounding. Even when the market has down years, your nest egg generates enough yield to sustain you, without you ever having to sell off your core engine. It's brilliant.
All right, so if the math is bulletproof and historically proven, why isn't everyone doing this? Why is everyone still trapped in consumerism? That brings us to Section 4, the psychological trap.
The biggest hurdle here isn't intellectual, it's entirely psychological. It's this phenomenon called the hedonic treadmill, or you probably know it as lifestyle inflation. We live in this system perfectly engineered by the advertising industry to keep us spending and keep us feeling inadequate. You get a raise, so you immediately rent a nicer apartment. You get a bonus, and suddenly you're buying a luxury watch. Your expenses rise in exact lockstep with your income, which keeps your actual savings rate at zero. When you succumb to lifestyle inflation, that 25x freedom number just keeps running away from you. Think about it. Every time your expenses double, your freedom number doubles right along with it. Without even realizing it, you are meticulously building your own golden cage. Breaking out of that requires the deep realization that spending money on stuff you don't actually need is literally stealing from your future time.
So, let's get practical. Section 5, your roadmap to freedom. How do we take all this and build a concrete execution strategy that you can start running with today?
Here is your highly actionable 4-phase game plan. First, audit your absolute baseline. Track every single penny for 30 days to ruthlessly separate your actual survival needs from your lifestyle wants. Second, destroy your toxic debt. Aggressively eliminate high-interest liabilities like credit cards because that interest completely wipes out your investment gains. Third, optimize your savings rate. Maybe start a side hustle or build digital income streams. And fourth, automate your investment engine. Don't let your money just sit in a checking account rotting from inflation. Automate your investments into low-cost index funds the exact second your paycheck clears.
Let's zoom in on that savings rate for a second, because the speed of your entire journey depends entirely on this one metric. If you only save 10% of your income, you literally have to work 9 years just to buy one single year of freedom. But if you optimize your life and push that savings rate to 50%, now every single year you work buys you an entire year of absolute freedom. It completely accelerates the timeline. Ultimately, this calculated scientific march toward your 25x number is about adopting true financial intelligence. It's about pulling yourself out of the matrix. Yes, it takes incredible discipline and a refusal to cave to societal pressure, but the payoff isn't just a bigger number in a bank account. The ultimate luxury you are buying is the total reclamation of your life and the absolute ownership of your own time.
So, I'm going to leave you with this final provocative question. Are you going to choose temporary material status today, or are you going to choose permanent time autonomy tomorrow? Calculate your number, protect your brain from those toxic spending habits, and ask yourself honestly, are you building a golden cage, or are you buying your permanent freedom?